Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra, and with me today is Ekta Batra. Ekta, good afternoon. What a day, right? We started in the green. We thought, okay, we are not doing what the global markets are doing in last couple of days, so to say, but we did not sustain that rally. And at the day's low, Nifty has seen cuts of 200 points from the highs, and Bank Nifty is the one which is leading to those losses. That one is down 700 points from the top. And the expiry date, definitely a lot of volatility expected.
Yes, absolutely, Sonal. Afternoon, it is expiry day, and volatility has been the name of the game in the past couple of trading sessions. Even yesterday, we saw that play out, and today seems to be a continuation of that. Not that much in terms of a downside right now. We are volatile in what seems to be a range. So let's see how the second half or maybe the last hour of trade pans out, because that's probably when the volatility will pick up, especially ahead of the RBI policy tomorrow. But let's get you all of the top stories we're tracking this afternoon. The market gives up morning gains. Key indices near day's low. IT and financials drag, while metals and healthcare lead with strong gains. Midcaps outperform.
Tata Chemicals surges in trade as Morgan Stanley double upgrades the stock from underweight. Capacity expansion powers up Chemcon specialty chemicals.
News drives swings for Midcap Pharma names. Torrent Pharma builds on gains after its acquisition of derma company Curatio. This is even as its Indrad facility gets 3 observations from the US FDA. Lupin meanwhile slips after a warning letter from the US drug regulator for its Tarapur plant.
Nykaa jumps as its board will consider a bonus issue next week.
Okay, so that's all what's taking place in terms of the top stories that we're tracking this afternoon. We do have a lot of stocks which are buzzing around on the upside as well as on the downside. So do watch out for stocks, even something like a Sharda Cropchem, which is down around 2% at this point. IGL, which is seeing a cut of around 2%, even something like an Ansal Properties. And I just want to point out that we're seeing a lot of moves come in on lower volumes within a couple of these stocks within the broader market. So you just need to watch out for the participation in terms of specific stocks. But yes, overall, it is expiry. Let's see what the second half holds. Ruchit Jain joins in to tell us what he's strategizing this afternoon. Ruchit, hi, welcome to the show. What are you calling out for in terms of the Nifty as well as broader market stocks?
Yeah, hi, very good afternoon. Well, there's no doubt about the trend, that the trend continues to remain negative. We are witnessing something that is exactly opposite what we have witnessed at the start of the series when the markets were going up. Then all the gap downs were being bought up to. So now that's exactly opposite what we are seeing now, that the gap up openings or the positive openings are getting sold into. And primarily the prime reason of this has been the rising bond yields and the rising dollar index of the recent past, which adversely affects the equities. So now, although yesterday we did witness 1 day of correction in the dollar index, but there are no signs that it has stopped out. It may be just a regular correction because of the overbought setups in the dollar index. So we have believed that the downward momentum in the equities are likely to continue in the short term. Now, just from a day's perspective, if we look at today's second half from the expiry perspective, I think some pullback move could be expected because the market is trading around that support of 16,770, 16,800 range. So some pullback move could be expected back towards that 16,900 to 17,000. But again, it would continue to remain a sell-on rise, and at higher levels, we would see some selling pressure again. So the trend is not changed. But because of some supports, pullback moves could be expected, and higher levels, we should look to take an approach of sell and rise.
Okay, and what would your individual technical picks be if some of those pockets are looking better now?
Yeah, so I have one buy recommendation and one sell. So banking in the NBFC space has been the weakest link in this current downtrend, which we are witnessing since last 1.5 weeks. So within the NBFC space, Bajaj Finance has broken its important support levels in yesterday's session, and today morning, even when the markets were showing some pullback, the stock had not seen any outperformance. So Bajaj Finance can be one can go short on Bajaj Finance with stop loss about 73.20 for near-term target somewhere around 6,900. And I think pharmaceutical space would be the only one sector where we would see some buying interest coming in, and some relative outperformance could be there in this falling market. So Cipla within the pharma space is looking quite good. The monthly close may be good if it ends at current levels by tomorrow's session. So Cipla can be one contra trade where one can look to buy at current levels of 1110 for stop loss below 1080 for targets around 1160.
Okay, well, yes, Cipla is definitely an outperformer, very resilient. But if you are talking about a couple of underperformers in the pharmaceutical space, there is Alchem, which is down around 3% at this point. So do watch out for that. And Lupin, which is down around 2.6% simply because of news, which is weighing down on Lupin today. Their Tarapur plant has been issued a warning letter. Richard, thanks very much for joining in and taking us through all of your picks. Let's get to our regular segment on the show, Midcap Movers, where we have Vivek joining in to take us through all of the broader market stocks that are moving around. Vivek.
Well, that's right. So today, for a change, you're actually seeing the broader market slightly resilient, the mid-cap and small-cap index continuing to hold on to marginal gains. But some interesting stocks on the radar that are clearly outperforming even in such a volatile market. First up is Century Enca. Now, this particular stock, after the AGM, where the commentary from the management was quite strong in terms of the demand revival, this is something that's keeping the stock quite perked up in today's trading session. Sun Pharma Advanced, the company has given an update to the exchanges saying that they would be having a presentation where they would be updating on their R&D pipeline, and this is something that has led to quite a bit of a perk up as far as the stock is concerned. Pondy Oxides and Chemicals, along with some of the larger names in the chemical space that are doing quite well, even this particular stock has moved up quite sharply in today's trading session. Next on our list, this particular segment, especially when you're talking about the shipbuilding segment, Maznau as well as Rights, both of them today are moving up on very strong volumes. And lastly, we have Finolex Cables, in the gaining space. This particular stock too is gaining quite significantly on larger volumes. On the other hand, Dr. Lal PathLabs today has seen quite a bit of a sharp correction after a sharp up move. And we also have Alchem Labs today, that is also going down. Alchem Labs, in fact, seeing quite a bit of sharp volumes as well. India Cements, on the other hand, after yesterday's up move, today again, this particular stock has been extremely volatile on the back of multiple news flow that we are seeing over here as well. So mostly, when you're talking about some of the real estate names too, today they're seeing quite a bit of a downtick.
Yes, a lot of stocks in focus today. Vivek, thanks a lot for joining us and giving us that list. For now, we'll slip into a short break. Up next in our special segment, Midcap Spotlight, we'll put focus on Agrawal Industries. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Some sort of recovery is what we are seeing from the lows. The Nifty is down 29 points right now. At a point in time, we're seeing cuts of around 60 points. The Midcap index is back in the green, sitting with gains of 44 points. A lot of movers, as we've been seeing in the broader markets as well. And some stocks which have moved this hour are the likes of Shree Cement and Ultratech Cement. So watch out for these two names. They are seeing some buying from the lows. And in terms of movers, we have Apollo Hospitals, which is at the day's high. So that stock should also come up for you on the screen. HDFC Life is the one which is the one in focus as well. But let us now focus on the NSE indices rejig, which will come into effect from tomorrow. Adani Enterprises will be the second stock from the Adani Group to be included in Nifty, while Shree Cement will exit the index. Vivek tells us more.
Well, that's right. So this is in continuation with the earlier announcement that was made by the NSE Indices Committee. So whole host of changes as far as all of the Nifty or the NSE indices are concerned. Most important one, of course, that we are tracking is the Nifty 50, where, like you mentioned, Adani Enterprises makes its entry, and Shree Cement is the one that will make way for Adani Enterprises. So now what we're actually tracking is we're tracking the flows, and if we're talking about the kind of flows that we could be seeing in today's trading session, remember, a lot of passive funds will actually have to change their weightage or the allocation based on these changes. So Adani Enterprises, on the back of that, will see inflows of close to $340 million, while Shree Cement will see outflows of close to $100 million. We're also tracking, the Nifty Next 50, and especially when you're talking about the Nifty Next 50 indexes, you're seeing a whole host of companies that are coming in. Among the top stocks, that will be impacted and seeing maximum flows are Adani Total Gas, close to $62 million worth of flows, Bharat Electronics, Hindustan Aeronautics, most of them are seeing quite a bit of strong flows. On the other hand, some of the stocks that are exiting from the Nifty Next 50 are Adani Enterprises. You're also seeing Jubilant Foodworks that will see outflows of close to $40 million. Lupin seeing outflows of close to $25 million. Lastly, keep an eye out for two stocks, both Power Grid as well as Coal India. Power Grid and Coal India are seeing weight changes as far as the CPSE index is concerned. Power Grid will see inflows of close to $30 million, while Coal India is seeing an outflow of close to $12 million.
Okay, all right, Vivek. Thanks very much for bringing us that update. But let's get to our other segment, Midcap Spotlight. We have Mangala Malu who's joining in. He's focusing on Agarwal Industrial Corporation. This is on the back of a bulk deal in which promoters have sold stake. Tell us more, Mangala.
That's correct, Ekta. The promoters have sold stake, but importantly, the purchaser is an influential investor. We had Ashish Kacholia, who bought 2 lakh shares in Agarwal Industrial Corp yesterday, and that's about 1.4% equity at the price of 570 rupees. In the bulk deal data itself, the sellers wasn't given, but in the exchanges disclosures, we had the promoter entities Jugal Kishore, Nitesh Agarwal, as well as Kishan Agarwal selling the stake that Ashish Kacholia went ahead and bought. And that's not all. Promoter entities also last month, Jugal Kishore Agarwal, Nilesh Agarwal and Kishan Agarwal sold about 2.3 lakh shares, which is about 1.6% equity. The promoters' stake or shareholding, if you look at it, in March it was 58.57%. In June, it was 62.15%. How is it that it increased so much in just less than a quarter? Well, that's because it increased on account of conversion of warrants. And here's the interesting part. In FY22, the company issued 35.1 lakh shares or convertible warrants to promoter entity, which were convertible at a price of 105.2 rupees per warrant. So the short point is that the promoters on June 9th converted their equity at a price of 105, and in just less than a couple of months, they sold it to Ashish Kacholia, part of it at close to around 600 odd rupees. So that's about the bulk deal that took place yesterday. As far as the company is concerned, however, it is an ancillary for the transport and logistics companies with a market cap of close to around 900 odd crore rupees, has 6 large marine vessels, 650 fleet size, which includes, bitumen tankers as well as LPG tankers, and they have 7 bulk storage terminals as well. Importantly, the revenue for the company has been growing strongly from FY19 to about FY22. Margins have been between 6 to 7%, but we're also seeing the gross block of the company, which has increased from 79 crores to close to 268 crores.
Okay, all right, Mangalam. Thanks very much for that. Let's now cut across to Shireen Ban, who is in conversation with the management of Indian Hotels.
Hello and welcome to On the Record. I'm Shireen Ban. The Indian hotel and hospitality industry is hoping that the recovery that it's in the midst of is going to be a resilient one, given that we are at the start of the festive season. A stock that's been a clear outperformer is Indian Hotels. If I take a look at the performance just in the month of September, it's up 15%, and this year it's up 81%. So the market is clearly excited about the strength of this recovery and the resilience of this recovery. To talk more about that, joining me now is Puneet Chatwal of Indian Hotels. Puneet, always a pleasure. Many thanks for joining us here on CNBC-TV18. So let me start by building on that. You had a great Q1. Is the recovery sustainable? How resilient is it looking at this point in time?
Well, firstly, the sector has proven its resilience despite COVID. And within the sector, we are the largest hospitality ecosystem. And I think we are very well positioned to take advantage of what I say the best is yet to come. As you mentioned, the festive season is ahead. And with the G20 planned as of December, with India getting the leadership, I do think there'll be some kind of incremental demand, which we don't have in normal years. So, yes, given our new brandscape or the reimagined brandscape, given our diversified portfolio, I think we are very well positioned to take advantage of the increase in demand.
I'll talk about the G20 advantage that you spoke of in just a second, but let me address the demand issue at this point in time. Q1 occupancy at about 70%. What is the situation that you are foreseeing at this point in time?
Well, the occupancies are maintaining good levels. So typically Q2 is the weakest of the 4 quarters. But with whatever I know, and we are just 2 days to the closing of the quarter, what we are aware of in terms of top line, I think it will be as positive as we could have expected it to be as for the entire sector. And within that, as I said, we are the we're a large ecosystem. We have had a very good, not like-for-like growth. So we are not expecting it to be, weak in any form. I think it should be one of the better Q2s that we have witnessed as a hotel industry in the last 5-7 years.
Okay, so significantly better than the rates that you saw in Q1 or moderately better?
No, I think what I'm saying is it's holding up quite well.
Okay.
Normally it is the weakest. So if it comes as close as possible to Q1, then that's good news for the industry.
Okay. What about ARRs? Because we've also seen a growth in ARRs year on year. That holding as well, and do you believe that you will be able to do better on that metric?
Going forward, I would say the Q3 is really the decisive quarter. It's always been the best, the strongest because of the festive season, followed by the wedding season, followed by Christmas, New Year, everything happens for the best in our industry in Q3. So I think the rates and the increase in rates, we will have to wait till November to see if that's moving in that direction. My personal opinion is it will. We have room to grow. We have room to grow since not post-COVID, but for the last 10 years. And the kind of quality of hotels we have, the kind of service we provide, the kind of offerings we have the ability to charge, but we have not really seen that as much as we are seeing it now. So I think all the brands, the sector per se is demonstrating the ability to charge higher rates.
So how much pricing power can you exercise at this point in time given the demand environment?
I definitely feel that on the business side, leisure is strong. It's, for our portfolio, it performed at 15,000 rupees, let's say. And business was at 10 to 12, and I think there is no reason why that should not hit 15 in the months to come.
Okay, let's talk about international travelers because the restrictions have been lifted. But as we heard from the secretary, we were speaking with him earlier today, he said it's only been a trickle so far. Do you worry about the fact that given the global environment, the possibility of a recession, that trickle is likely to continue to be the trend and not turn into the deluge that industry was hoping for?
Well, Shireen, for the lack of better sentence, which I've used with you on your channel several times, I think this too shall pass. So, of course, shutting down is an easier decision. When you reopen, it takes time to kickstart any business, any industry, any sector. So I think with the October to March is typically when you get the international tourists. So it may not happen as much in October, but I'm very optimistic that as of November or at the latest as of January, February next year, that international travels will start coming back on the leisure side. On the business side, it's already coming. I mean, we have had a lot of global CEOs already visiting India in September. So that's been good news. And recently there was a JP Morgan Congress also in Delhi. So I do think that's business travel has started. The flights are full. The airfares are, very high. But of course, the number of flights is less. So at some point, the demand and supply will balance out, and we will get to see more and more people coming in.
Let's talk about supply. You talked about G20. What we are seeing at this point in time is that the hotel industry has the appetite to grow, but not quite the financing ability to be able to grow and deliver on the kind of supply requirements. Yours is a different story in comparison to many others at this point in time. But this supply-demand mismatch, how do you see it panning out? And is that invariably going to mean good news for at least branded players like yourself if there isn't additional supply that comes into the market?
Well, I would like to state it differently. As long as demand continues to outpace supply, your pricing power will be strong. If supply does it the other way around, it outpaces demand, then the rates are always under pressure. So at the moment, given what has happened in the COVID times, I definitely feel demand will outpace supply in the major metros. But there is a strong need, given all the schemes the government has put in for development of infrastructure, with the Project Udan, with the new airports, with the Prime Minister Gati Shakti scheme. So I think all these would require a lot of infrastructure development, which is also the focus on the last budget that we had, and the indirect beneficiary of the infrastructure investment is obviously hospitality, and a lot of hotels need to be built in tier 2, tier 3 cities, and I think it's a good opportunity for the sector. Should we get the amendment in the infrastructure status, which we have been lobbying for, requesting for, asking for a few years now. For some reasons, it's limited to a population of 1 million. Should that get changed and amended, because it's based on a 2011 consensus, I think it gives you cheaper loans and a longer moratorium period. And at the same time, if the sector gets the industry status in the different states, some states have given it, but if others follow, I think that will improve the investment appetite in the hotel sector, and which will help in phenomenal job creation.
You know, we'll talk.
Welcome back to Midcap Radar. Well, as choppy as it can be, we had the Midcap Index, which has moved into green and has continued those gains. So Midcap Index is up 80 points as we speak. A lot of broader market movers, but remains to be seen whether we'll continue this momentum or not, because last 1 hour of trading day today will be very, very crucial, because it is the monthly expiry, as we've been pointing out. Nifty down 20 points. We have Bank Nifty, which is the one which is dragging the other indices, but now it is in line with the other benchmark indices. That one is down 0.2%, and we have a lot of action up for you. So stay tuned. That's all we have on Midcap Radar Mutual Fund Corner when we return.